David, it's the 5th year we're doing this. Time really flies. I was looking back at the old interviews earlier, and it's like in the first one, you have one daughter and she's tiny, and then the twins are born and then they grow up, and like we can see life go by with these things.
Yeah.
I guess I had fewer gray hair back then too.
Yeah, me too.
Welcome to the show. I think we could do it super simply, right? The State of Scuttleblurb this year. I'm really curious about how things have gone for you as a writer, as an investor, about the Scuttleblurb as a business, all that stuff, and about the market and investing in general. Super simple. So, State of Scuttleblurb. How's it going?
Yeah, sure. Yeah, things are going well. Let me kind of just maybe open with numbers here. So for 2024, gross revenue. Let me just back up. So I've got Scuttleblurb. I've got like a WordPress version of the site. And then at the start of 2023, I also launched a Substack version of the site. And so across both of those platforms, total gross revenue for 2024 was about $310,000. And that's up from $285,000 a year ago. So
nice.
About 9% year over year growth. And that's an acceleration from last year. So in 2023, gross revenue was up about 5%. And so the Substack last year was about 21% of total revenue. And this year it's grown to about 32%. It's become quite sizable, the Substack side of the business, and it's the part of the business that's growing. So if I look on the WordPress site, the gross revenue on that side was down about 6%. And then the Substack bookings were up about 65%. And so that kind of blended out to that 9% growth.
Do you think most of the Substack subs are additive or?
Yeah, it's a good question. I don't know. I've asked myself that too. And I just don't know how much of that is like cannibalizing what otherwise would have come on the WordPress side. But, overall, just happy to see growth in the aggregate.
Yeah, no, that's always nice. You escaped the curse of 2022. I think that was the toughest period for everybody there.
That was tough. Yeah. And so 2022, I had a pretty big, about 10% decline from 2021 as far as revenue goes. So glad to see that things are growing again.
And do you think this is mostly kind of a macro thing, right? Like the market is more interested in this, or have you made changes? Do you have like change plan for the future? Are you like, I know you did the podcast with MBI. That's a new thing. I really like the first episode. Curious about the format of Scuttleblurb. How is it evolving?
Yeah, so I think probably the biggest impact on the business is just the pricing actions I took towards the end of last year. I've raised prices before, but it's only been on new subscribers. So I've never done an across the board price hike in like the 8 years that I've been doing this. I think on a blended basis, maybe the average subscriber was paying about, call it $220 a year. And I raised prices to about $320 per year. So we're talking a pretty substantial increase there, maybe a 45% plus price hike. The reason for that is when I first started this blog, I didn't really give much thought to the audience. I just kind of hoped that if I did a thoughtful job and I did good work, people would pay to read it. And I'm lucky to have built the audience that I have. But now some time has passed and I have a much better sense of who reads my stuff. And so here's kind of how I'm thinking about things. This is speculation. I could be completely wrong about it. But here's how I think. I think like most folks out there who have an interest in investing or investing newsletters are just kind of like looking for a guru to give them the answers, right? Like so. And I kind of understand that, like they don't look at stocks for a living. They're not going to come home after a long day's work to evaluate the arguments for buying or shorting a stock that's laid out in a 7,000 word post, right? They see, David Tepper pitching Chinese stocks on CNBC and they think, well, Tepper's a billionaire. That proves he's smart. He's balls deep in Chinese stocks. So I am too, right? And like the justifications for buying Chinese stocks are kind of beside the point, right? It's sufficient that billionaire investor David Tepper likes Chinese stocks. And I think that like a lot of people fall into this category. So this would be like your neighbor who couldn't pronounce NVIDIA 2 years ago and now is like wondering why you don't own it, right? And that's why I think like most investment newsletters out there are so light on analysis and so heavy on pomp. It's, I said this stock had 300% upside a year ago and now look how right I was. In part, people, I think they look for investing gurus because, they don't have the time or confidence to look into things themselves. I think maybe part of it is they want to deflect blame if things don't go right. It wasn't my read of the analysis that led to this poor result. It's, I put my trust in so-and-so, it's his fault. In investing, I think expertise, it's such a fuzzy concept. Like if somebody were to tell you that they're an expert in black holes or US GAAP accounting, and they have all the right credentials and the right experience, you don't really blink an eye at that, right? You just kind of take them at their word. But if somebody were to come up to you and say that they're a stock picking expert or a market expert, regardless of their credentials, that should raise some red flags, right? Because
it's almost a red flag in itself.
Yeah, right. Because like no legit investor would ever describe themselves that way, right? Maybe another way to say this is, you don't ever hear about surgeons saying that they had a bad year, right? Like if a surgeon's patients are dying at, 10 times the rate of other surgeons who are operating on very similar patients in a similar setting, you're going to maybe draw the conclusion that this is a bad surgeon, right? But if you run into an investor who's underperformed the market in any given year, they could be a bad investor, or they could just be having a bad year, right? That's a perfectly valid thing to say. That's the kind of thing that happens. Buffett has had long stretches of underperformance. Munger had two minus 30% years back to back in the 70s. You and I sort of understand this, right? But there are a lot of people who don't, I think. And there are a lot of goobers out there with newsletters who try to exploit that fact for their advantage. So let's just exclude that audience, I guess. People are looking for gurus because they're not going to be interested in the stuff that I'm writing, right? So among the group that's left, my guess would be at least half are just looking for stock pitches that are immediately actionable. And I don't do stock pitches, of course, and I don't do like immediately actionable ideas except on rare occasions. And so that kind of further limits my audience. And then so you're left with people who they aren't looking for gurus. They're looking for like a reasoning process, but they also want like immediately actionable ideas. So if you're looking for immediately actionable ideas, I think you're also kind of not my audience either. And then so you're left with people who are okay reading stuff that isn't immediately actionable, that doesn't have like the carrot of like you can put money behind this idea today. But even of the remaining audience, what I tend to find is that their interests tend to cluster around certain industries. And so if you're very active on Twitter and you subscribe to a lot of Substacks, my guess is you're probably in like a younger demographic. You're probably in your 30s, maybe early 40s, and your interests from an investing or industry standpoint are probably more concentrated in like tech and growth and consumer and that kind of stuff, and maybe less so in industrials and commodities. And there's some overlap here where like if you're interested in like big tech, you're probably also interested in, Mag 7 or in like fintech. When people are considering whether or not to read a post, there needs to be this flash of recognition, right? The write-up, it can be about like a company that they own. It can be about like a competitor of a company that they own, or it could just be like, people are talking about a name a lot on Twitter. I don't know how like certain ideas get into the water supply of Twitter, but there's some names like, a Floor and Decor, for example. I don't know that people would be intrinsically interested in a lumber flooring provider, but Charlie Munger says the words Floor and Decor, and then other people sort of append the label, Costco of flooring, and people have a sense of what that means, right? So if I were to write a post about Floor and Decor, there's this imprint in their mind of like, oh yeah, okay, Costco of flooring. Like I know what Costco is and how it competes. They'll be more willing to read something like that than like a Simpson Manufacturing, which they've never heard of, right? Or an Atlas Engineering or Louisiana Pacific. So it helps, I guess, from a business standpoint to write about stuff that it's not that people have to know the names intimately, but they have to have some recognition, I guess, right? So people, their interests tend to cluster by industry. And here's me, and writing about, fintech one month and building materials distributors another month. And I think, that gives people whiplash. It throws people off. And I think that kind of further limits my audience. And so, essentially we've kind of narrowed this audience down to, people who are compelled by reasoning rather than reputation, who aren't just looking for the gurus. Number two, who are just intrinsically interested in learning about businesses and don't need the carrot of an immediately actionable idea. And then three, who don't limit themselves to certain industries, but are fine kind of jumping around from one industry to another. And I think you're left with a pretty small group of weird, obsessive, passionate generalists like me. And I think like the chances are, if you are pretty high that if you fit that profile, you probably invest for a living or do something very closely related to that. And you have a high willingness to pay for the stuff that I write. And so, I was charging $220 a year, and it just felt like that price point was sort of in no man's land, where the vast majority of people who subscribe to investing newsletters would never pay even like $50 to read my stuff, let alone $220. And then I've got like this very small niche of enthusiasts who I think do get enormous value from what I write. And so that was why I raised prices in a nutshell.
Yeah, when I think about your stuff, I think about it as training, right? So some stuff is like, oh, I'm looking for an idea to invest. With your stuff, what I like is, even if it's a company I don't know anything about and I may never invest in, learning with you, like you think out loud with your writing. And so going through the process is a transferable skill, right? When I see how you think about a business and I'm like, oh, he went to this source, or he asked this person, or he asked about this specific KPI or thing, that's what's most useful to me, because then I look at my own stuff and I'm like, shit, I didn't do that. I didn't think of even asking that question or looking at that. And so that's what I think makes me better by reading your stuff. Sometimes the idea aligns with the type of companies I like or the type of industries I like, and it's purely aligned, and we may invest in the same thing. But sometimes you look at things that I don't have direct interest in, but I still learn a bunch. I suspect your readers are probably feeling a lot of that too.
Yeah. And I've always tried to gear my writing. It's research, right? It's not me trying to persuade my audience of anything, right? It's not a pitch. And I try to be as clear about that as possible. Unfortunately, a lot of people still assume that everything I'm writing is a pitch, because I think they've just been accustomed to that, right? When they subscribe to newsletters, it's almost always like pitch oriented. But yeah, it's an exploratory process, and I'm still figuring things out. And the vast majority of the time, the conclusion is, look, I don't know what to do here.
It's like a bank of idea that you're building up, and even things that may not be investable now, if in 5 years there's a great opportunity, a lot of the time these don't last forever, right? So it's great to have pre-studied the industry in advance, know some about the company, and then you can act when it's the time. But too many people expect that you're going to have the exact right idea at the exact right time when the valuation is perfect, and that very rarely happens.
Yeah, right. And so, it's more about, building the foundation, right?
I wonder how many of your readers, or maybe first-time readers, they load up a post and then they scroll to the bottom and look for the recommendation and the valuation price. Now they're going to be disappointed.
In general, I think way too many people are focused on the valuation part of my writing. Like almost all the emails I get, it's always like, oh, I think you should have used a 30 multiple instead of this 20 multiple. Or, I think margin should have been 28 instead of 25. And I just think, well, look, when I usually dedicate maybe a paragraph at most to the valuation side, my thinking there is, it's not me saying, look, here's what it should be. It's just, here's one possible scenario out of many. And if you want to toggle the margins and the multiple, knock yourself out, go for it. This isn't
you're not
me saying,
preventing them from doing their own math, right?
Yeah, but the feedback I get, it tends to focus on that part of the write-ups. And I never really know how to respond to those.
I'm curious if your research process has changed, especially now. Have you started playing with some of the new AI tools, or are you using Perplexity for some of the research? Are you using some of that stuff to help you polish up the writing, find the grammar mistakes or whatever, or a turn of phrase? Or are you using any of that stuff, or are you still old school?
Yeah, no, I use Perplexity all the time for research. I would say it's sort of become my default search engine away from Google. it kind of surprised me how quickly, because like Google, there's kind of like a muscle memory behind using Google. I was kind of surprised by how quickly that sort of dissipated as I started using Perplexity more. I just find it a lot more useful. I think it's helpful around the margins, I guess, in my research. I would never use it to, I wouldn't upload a bunch of transcripts and then start asking questions to learn about a company. I don't think that's the right way to go, because you just don't know at the start, like, what are the right questions to ask, right? I think you need to kind of do the hard work of going through all the SEC documents and the transcripts and whatnot just on your own, and kind of build that foundation to start with. And then you can start using the AI tools to kind of round things out and flesh out your knowledge in certain areas. So that's how I use it so far. I don't use it for writing at all at this point. Basically, it sped things up on the research front. It just made me more efficient there. Yeah, so Perplexity, I use that all the time.
I find it also useful for if you're getting into something new for the first time, like a brand new industry, right? Or a brand new concept in science and history and the Roman Empire. It could be about anything. And sometimes you just want to have a kind of a tutor to ask a few questions to and go back and forth and get the outline of the thing. And then you can fill in the details by more research. But for that, I find it very useful. I haven't used it that much for investing, more for other things. But I could imagine it like at some point if I don't know, I want to learn about a company, brand new industry that I've never looked at, like getting the 101 on things, like that would be perfect.
Yes, exactly. Yeah. So like right now I'm kind of looking at some like life science tools type companies. Yeah, I'm reading through all of the transcripts and the SEC documents, but I don't have a background in chemistry and biology. And so I'll run across certain terms that I don't understand. And Perplexity is great for that. I'll just kind of ask, how are capping reagents used in mRNA production? And there's a pretty good summary there with all the links attached. And I've found that to be like a really useful way to get up to speed. But yeah, how you described it is kind of how I use it as well. I use it in parallel with the research that I'm doing. It's not like a substitute by any means, but it's great when I like come across concepts I don't have familiarity with and I just need a quick tutorial. It's great for that.
Life sciences and biology, and that's a perfect example. Like you may never want to be a biologist, but to do the kind of 80-20 on getting the big concepts and how things fit together and make sure you're not misunderstanding stuff. Like what a world we live in that we have this super, well, not super intelligence in all aspects, but super knowledgeable in as far as facts and all that at our fingertips.
Yeah. And I'll just, by the way, to go back to the pricing thing, let me just share, I guess, how things have gone so far with that.
Yeah.
So I raised prices starting on November 1st, 2024. So I have basically 2 months of data at this point. And so just looking at the WordPress side of things, I haven't dug into the Substack side, but just on the WordPress part of the business, the number of orders in the 2 months, November and December 2024, are down 16% relative to a year ago. But the revenue is up about 23%.
So when you say down, is that new subscribers or is that like renewals too? Or what does that include?
Yeah, exactly. It's everything. It's just the number of orders. And it's interesting because if I were to look at net new subscribers for November and December, so the WordPress subscriber base, that's still shrinking, but it actually shrunk by less in November, December than it did November, December 2023 and in 2022. And so like if you were to just like look at a chart or a graph of my net new subs, you wouldn't be able to tell like when the price increase went into effect. So it doesn't seem to have had any material effect here. It hasn't worsened the trend, I guess is the way to put it. Quite pleased about that. Yeah.
And I'm not surprised that the WordPress subs are like the hardcore OGs. They're not going away.
Right. Yeah.
Looking back at the past year of like everything you've published, I'm curious if there's anything that stands out that you're particularly proud of or anything you wish you could go back in time and do differently or change, or there's always some drama, right? So Expel had some drama, you had some updates. Like I'm curious to discuss some of the year's highlights in both directions.
Yeah, I mean, I think a lot of the stuff I've written about in the past, it's been like companies that were widely acknowledged or appreciated to be exceptional businesses, right? And I think, you know, when I first came onto the scene, there was a void in the market as far as explaining why these were exceptional businesses and why they may or may not continue to be.
It was the compounder era.
It was the compound.
People were starting to figure out the
era.
compounders.
That's right. Yeah. But now there are so many people doing that, right? And there are like entire podcasts dedicated to explaining why companies that everyone knows are great businesses are in fact great businesses. Don't get me wrong, those are valuable, I think. I mean, even for businesses that are well known, you want to know like the what's and the whys. I think that helps develop conviction when the stock inevitably draws down 30%. And look, if writing about constellation software helps you learn in public and develop conviction, even though, 100 people have already written about it, go for it. Not hating on that at all. But I think what I'd like to do more of is I'd like to like mix things up a bit more, go off the beaten path, talk about names that I think are less well known or have some controversy or hair on them, or are like, maybe going through some kind of big transition that isn't reflected in the financials. So, like something like LP, like Louisiana Pacific is maybe one example of that. I wrote about them earlier this year. Their legacy is they used to manufacture oriented a strand board. And so that's, you take a log, you cut it up into thin strips of wood, and then you lay some out vertically, some horizontally. You glue them together with wax and resin, and then you apply a lot of heat and pressure to it. It's a commodity business. And what they're doing is they're sort of repurposing the OSB plants towards making like branded siding products, which are much higher margins, generate higher returns on capital. Because like in the building product space, in certain niches, you'll find like these branded oligopolies like Trex and composite decking or James Hardie and siding that are very like tough to dislodge from the value chain, because you need to like simultaneously win mindshare with homeowners and contractors, and then also get placed with dealers and distributors too. And those things reinforce one another. So it's an interesting part of the value chain. Yeah, so I spent a lot of time on building materials. That was pretty much my entire summer.
Yeah, sexy stuff this summer. Vinyl sidings versus wood, composite decks and framing lumber and roof trusses, and everybody else was on NVIDIA and TSMC. You were on siding.
Yeah, so I don't think I did myself many favors from a business standpoint, focusing on names like that. And so, yeah, there's always that trade-off, because I know what people are interested in, right? And I know that I could just write about that stuff, and I think it would be good for growth. But I don't want to be captured by my audience.
No, and I think your audience appreciates the authenticity too, right? If you turn into something that you're like, I don't think it would work that well anyway, because that wouldn't be you. That wouldn't be real.
Yeah, right. Yeah, so I think it might be good short term. I think longer term it would. Be harmful. So yeah, and so I did spend a lot of time on building materials. I wrote up some lesser known names like Simpson, and then revisited some stuff with like some hair on it, like XPEL and Lamb Weston, Burford. Yeah, so I'd like to, I guess, continue in that general sort of direction. So yeah, we'll see how that goes. But that's kind of where my head's at from a content standpoint. The other big news from a content front, I guess, is the podcast.
Can you say what the second episode will be about? Do you know?
Yeah, so the second episode, it's going to be about XPEL. So, yeah, so that'll be a good one. That's going to be
interesting.
Yeah. So podcast is, that's me and our mutual friend, MBI. We're going to be doing like a podcast once a month. The idea there is like, I've always looked at the Scuttleblurb blog as like a diary of my investment related thoughts. And that turned into kind of like a lifestyle business. And I like it that way. I've never really had ambitions to turn this into like a big media business. And I've never really thought of myself as a media guy. I don't want to be out there like tweeting constantly and going on all sorts of podcasts. But, at the same time, I can't ignore the fact that, this blog, it's my primary source of income. And, like people often say, quality over quantity. But I think that quantity matters in ways that people may not consciously recognize. I like to sometimes joke that I could probably take one of my posts, and instead of having it come out like once every 3 weeks or whatever, I could cut it up into 3 pieces and have it come out like once every week. And maybe people would think that they're getting more out of that because of the frequency.
It would work. It would probably work.
I feel like it shouldn't work, but I feel like it would work. there's just so much stuff out. Like there's so many newsletters and so many commentators and everyone sort of like competing for attention. When you're writing like once a month or twice a month in some cases, it's what tends to happen is like you kind of slip in and out of people's memory. You're not kind of constantly up there, right? And so like I kind of felt like I should be out there more, but I also like, didn't want to be one of those cheese balls who's constantly thumping his chest on Twitter about how all the calls he's gotten right and then memory holing all the ones he's gotten wrong. And I wanted to like be out there in a way that provides value, but also doesn't subtract value from subscribers who are paying for my stuff. And also it has to be something I enjoy. And also it has to be like low effort because I'm busy with my research and my kids and I don't want to trade off that time. And so I thought like, yeah, a podcast was like a good way to sort of achieve those objectives here. And so MBI reached out to me a while ago and I turned it down at first because I guess, so with writing, I've always found comfort in writing because you can put forth like the best version of your argument. If you're doing a podcast, you have to be okay with the fact that you're not always going to be able to make all your points in the best possible way. And I think you have to be a little bit charitable to yourself and you have to have faith that the audience sort of like understands that.
Yeah.
That there's going to be a lot of gaps and you're not going to say things perfectly. But I also see it as this high impact, low effort way to connect to your audience because I mean, it's literally your voice in somebody's head, right? And so that's a kind of intimacy that's hard to replicate through writing, I think.
Exactly. You can't say things perfectly. You can't think true, but you get a connection with people that you don't get with text. It's lower effort for them too. They can walk the dog and listen to you. Like you can reach them at times that you may not reach them otherwise. And I think once people get to know you, and if they like the way you think, they kind of like you, they'll be more tempted to want to read your stuff and pay for your stuff and like get the whole package. I think it kind of fleshes out their mental model of you, right? They see you as a more three-dimensional person.
Yeah, no, I think that's a good way to put it. This is something I think I'll enjoy because I like talking to MBI about stocks. I think he's smart and he's very thoughtful.
He's great.
Yeah, and it's low effort because we're talking about stuff that we've already written about and covered. And yeah, and I don't think it subtracts from the value that paid subscribers are getting because the write-ups, they're more organized and they're exhibits and it's just a different product. So
yeah, well, it's a conversation.
Yeah, exactly. And so this is going to be, the approach that we take, there are a lot of investing podcasts out there and a lot of them do a good job kind of digging deep into companies. I think though, I tend to find that a lot of them have this like a pitch oriented flavor to them where it's let me try to persuade you why this company is great or the stock is a buy. And that's something that I think MBI and I were both trying to avoid. So like you should think of these podcasts as casual conversations that you'd have about companies with a friend at a bar or something. It's going to be meandering and impressionistic and it's not going to be very well organized.
That's the best kind of podcast when you see where it goes. And as you say, like you feel like you're just sitting down with a couple of friends and learning stuff. If I want to learn something like in detail, I'm going to go read the deep dive. I don't want someone to sit down for an hour and a half going through every single detail that's in one of those deep dives. Like I can understand how some people like listen to the audio version as a kind of audiobook, but yeah. That's fine, but that's not the best way to learn about these things to me. Like you want to see the graph, you want to pause and do the research and make some notes and like look up some charts and go in Coifin. And like the research process is very different from just sitting down and chatting about how terrible Expel has been doing lately or whatever.
Yeah. Yeah.
One project you had this year that was kind of different, kind of in between, right? Not like super sexy, but like still pretty high quality company was the Serial Acquirers. These were closer to my heart because I kind of knew them in advance, Amtech, Roper, and Teledyne. I suspect that starting with learning about Berkshire first, you kind of learn that model, and then you're kind of looking for other companies that are good at M&A and can create value that way and redeploy capital that way, because it's so rare for anyone to create value with M&A that once in a while when you find someone that can do it, it's one of those special skills. And so I'm curious if you have any takeaways from looking at those or what you think of those companies. It does feel like they're having a harder time finding good target at good valuations. But anyway, I'm curious if you had any thoughts about that series that you did.
Yeah, they're very interesting because not only are they serial acquirers, but they like completely transformed their business, right? Like if you were to look at Roper today, it's a software company.
Yeah.
They focus on vertical software, but that's not how they began. And the same is true with Ametek and Teledyne. They maybe started off with like heavy industrial type products, and then they sort of deviated away from that into more like instrumentation and products with higher IP. It's a bit different from something like Constellation, right? Where they've kind of always done software, and it's always been like these small little companies. I think you're right. I think one of the challenges with a company like Teledyne is that they're trying to acquire like differentiated IP. And that's not something that Constellation is necessarily doing. And when you're trying to acquire differentiated IP, you're targeting like these oligopolistic niches, and you run into a scarcity problem, right? Especially like as you get bigger and you need to do bigger acquisitions. Like you can move the needle by doing a lot of small acquisitions, and that's kind of what like Constellation has done. Or you can like do fewer really big acquisitions. And I think if you're operating in a space like Teledyne, where it's really focused on IP differentiation in these niches, you're more in that latter camp. You've got to put out like, you got to take bigger swings in a smaller pool of opportunities.
And it's more case by case. You can't have a playbook that you just rinse and repeat.
Exactly.
Turn the crank, do more of those. It's like every time it's kind of make or break.
Exactly right. Yeah. And so like, yeah. So Constellation, obviously they're the GOAT, and they've kind of executed upon this playbook and done it very well over and over again. And I think Teledyne, they're just different in the sense that if you're going to be taking these big swings in these narrow markets with high IP differentiation, you're going to be paying up more. And so that's what you've kind of seen over time. They're paying bigger and bigger multiples. Whereas I think Constellation, I think on the bigger stuff, they've had to pay up more than they have for the smaller stuff. But there's still like a vast opportunity, I guess, within like these,
And even for the bigger stuff, they'll tend to go for stuff that's like a turnaround or a divestiture for non-economic reasons, or like they got some great stuff from the ICE merger that way, but they're not winning many big ones, right? It's going to be the cherry on top, but I think the main engine will have to remain the smaller deals for a long time.
Yeah. Well, you would know this better than me, but like I don't think they're paying that much more for these smaller deals than they were,
not really,
5 or 10 years ago, right? Yeah. So that's just a different dynamic. I think it's a challenge that Teledyne may be facing, but yeah.
One in between that I saw is Cintas, where I was looking at, they have a 10-year, 27% CAGR selling like uniforms and hand soap and all that kind of stuff. That's one of those businesses that I think was kind of a little bit popular on FinTwit, like maybe 10 years ago with Bluegrass and these guys, but I haven't heard much about it since, and that's a very interesting one.
Yeah, it is interesting. I don't think, because I don't know that like uniform rentals is like a good business in and of itself, right? It's logistically complicated. So it's not just, it's like with waste management, you're going out there, you're picking up the trash and then you're dumping it. With uniform rentals, you're going out there, you're picking up the uniforms, but then you got to bring it back, clean it, and then send it out. And you've got to do that reliably week in, week out. And so, and if you look at other players in the space, they really haven't done that well. Like if you're just back out Cintas and just look at Aramark and
is it just like their execution? Are they just like operationally much better, and that's the secret sauce?
I think it's the route density that they have. They have better route density, but a lot of it just seems like execution. Yeah, they've just done a much better job, and they've been more serious about ERP implementation and just getting, I guess, the nuts and bolts right. They just seem to be a lot more on the ball than their other peers.
It's not one of those sexy ones at first glance, but when you look at the stock chart, you're like, oh, something's going on here.
Yeah.
I was thinking back to the last time we did this interview as a podcast, we talked about Carvana and how like bombed out it was and what a terrible situation. And like, because you wrote about them and like, it was probabilistic, right? And then we're like, oh yeah, it didn't turn out well. And then since then, that was basically the bottom, right? And since then, it went straight up. I'm like, okay, what's going to be the Carvana for this year? I'm like, I hope it's Expel. That would be fun. Like, get the bottom of Expel right here. But anything went kind of sideways. I know that the fourth CEO left. There's all kinds of like unexpected things, but nothing Carvana like this year, right?
Yeah, I don't. Trying to think.
I think GFL sold a bunch of assets, or I don't follow them closely, but I don't think that was necessarily a bad thing. Maybe just
no, that was not a bad thing. Yeah, They sold the environmental services part of the business, but they sold it at a good multiple, and they're keeping like a 44% stake in it. So I think that was all good. I'm trying to think if there's, I don't know. I don't think anything comes to mind as far as.
Oh, that's good. That's probably good. The next thing, maybe to open up the aperture wider to the general market in 24 and maybe going into 25. I'm just curious if you have any thoughts about it. Like, we don't have a crystal ball, right? The real answer is we don't know, and stuff just, there's so much randomness in the system. But just as a kind of like market feel, or how you're thinking about it, what are you seeing? What I don't know. Any thoughts there?
Yeah, I mean, there are certainly some parts of 2024 that rhymed with 2020 and 2021 as far as just kind of stupidity goes. I think the meme that comes to mind is the one with the guy throwing the intelligent investor into the trash.
I won't need this anymore.
Right. And so that stuff is like fun and interesting. At the same time, I think it's also like easy to avoid. I don't think we need to wonder like what we're missing with MicroStrategy or Fartcoin or like Destiny Tech 100.
You mean you're not leverage up Fartcoin?
Yeah. And so I think the classic compoundery stuff, I think it's, I think reasonable people can agree or disagree on whether those will make for good returns going forward. I mean, if you look at like a company that everyone sort of acknowledges has an incredible moat and relevance, and they're kind of growing high single digits, businesses with those kind of profiles. So I guess I'm thinking stuff like Copart and Moody's and even Cintas, like those things are probably trading between like 30 and 50 times forward earnings at this point, right? Like
Visa and S&P Global and all these classic high quality compounder company are.
Yes,
business is doing well, but the valuation is tough.
Yes, yeah. Not that those can't work. I just think that we're at this point where I think you have to ask yourself if you're getting paid enough to own those, given treasuries are kind of bumping up against 5% here. There hasn't been too much action on from my end. I mean, I bought some XPEL, some Visa, some Meta. I dumped Dollar General at a loss. I trimmed a bunch of stuff. And so I'm holding more cash. I was holding more cash at the end of last year than I was at the start of the year. As with my writing, I'm just trying to like look, I guess, off the beaten path a bit more. And so like there are plenty of life sciences names that have gotten slaughtered or have lagged behind. I'm putting a little bit more time there. I bought some Maravai recently, and maybe there's more to do in that space, but we'll see.
All right. Thank you so much for doing this. Anything to add before we go?
I don't think so. I think
what have we forgot? How are the kids doing? The most important thing.
Oh, yeah, no, I mean, the kids are fantastic as usual. Yeah, we got through the holidays without incident, and everyone's back in school again. So the mornings at House Kim are quiet.
Yeah, recharging the batteries. I know that feels awesome.
Yes.
Well, I'll put all of your links in the show notes for Scuttleblurb, for your Twitter, for the podcast with MBI, for the past 4 interviews like this. If someone's coming to this new and that hasn't read and heard the past ones, I recommend them. But yeah, thank you so much, man.
Yeah, awesome. All right, cool. Thank you.
Have a great day. Bye-bye.
All right, you too.